So I usually start off my weekend wrap up videos with, the DXY, the markets, and then I eventually move on to the miners, which is the focus of all my videos. But I'm going to start off with the GDX this time just to show you how obscene this move is. Yes, we came down with the markets, and I've always said when markets go down, the GDX, the miners go down, even gold goes down when everything is just in total panic mode. And the only things that really go up are bonds, volatility, the dollar, and then whatever's like inverse, like inverse short ETFs. That doesn't really count. Point is, bonds, dollar, and VIX go up. This time, bonds are, I mean, they also had that little whipsaw up down, but basically they were going down. There was a bond breakdown, which was kind of saved last minute. Not even saved, it just didn't flush on Fridays. I don't think that's over. Next week, we could have a bond breakdown still, despite what's been going on in the background, which is basically Trump blinking because of the bond breakdown, because the Japanese and the Chinese were selling off the bonds. But I don't think that story is over. I don't think it's all over. But then, other than the bonds, breaking down, which otherwise doesn't happen, you've had the DXY completely collapse with bonds pretty much. That doesn't happen either. So it's different this time. And then you've got the GDX just screaming up to new all-time highs. So it's different this time. It really, I know those are famous last words, but really it's different. And it feels like for the first time in a long, long time, you've got, and it's got to be institutions now, they're starting to buy and notice gold miners. And gold, I mean, gold's just been completely insane. It's a runaway train. Yes, that took a small dip. Let's check out gold whilst I say it. They also took a little dip with the GDX. And then they went up, small dip, right back to the ascending. I mean, there's so many support lines. It would have been impossible for this to really break down. But it did okay on the first drop, and then there was 2, 3 days where it actually did drop with the rest of the markets. There was actually one catch-up day on the way down, the miners included, and then it's just reversal, and it's just look at that closing a high of day. This is literally insane, like $100 a day, and now, I mean, your guess is as good as mine. Next stop 3,500. And then 4,000. Remember when they used to say 5,000 gold a few years ago? Like 5,000 gold is easily attainable within, I don't know, this year might be a bit too much, but next year, $5,000. Yeah, sure. Why not? 10,000? Sure. Where's the bottom of the dollar? What's going on now is insane. It's finally the moment we've been waiting for. It's a bit surreal and it's different than all the other times. I really feel like that. And therefore, and I was sort of trimming miners. I felt bad that I didn't sell miners. Let's go back to the GDX actually, whilst I say this. I felt bad that I didn't sell the miners up here more because we had this one day here, the 3rd of April, where the whole all the markets broke down and we kind of just went back from red to green. And I thought this was my moment to sell, and I didn't. And the next day, that was that catch up, catch down moment where we just really, it was like a minus 10% day or something, insane losses in the miners, more than the other markets that were going down. But then what happened here was insane. And actually, I was selling on the way up, thinking, okay, there's no way we're going to go all the way back up. And we did. So now I'm pissed off that I didn't sell, that I sold too much. But I always held my core position. I've got a decent amount. It's a bit light for what I'm used to. It's actually worth a bit more now because it's gone up so much. But that's something for me to judge. And honestly, my plan is to buy the dip. I'm not selling anymore. The trims are good. Now I think we're in for bigger moves. Has the market finally figured it out? This thing, if that's true, if the market has finally figured out that miners are the one thing to own for the next couple of years, which we've known for 10 plus years, maybe it's time to hold off because it's like the RSI can be oversold or overbought. It can stay like that for a long time. So this trend could just be getting started because we have not had the kind of moves that we've seen in Nvidia's, Teslas, and all this stuff. So I'm not selling anymore unless it really gets crazy to the next levels. And I'm going to look at the levels now with you, but my plan now is to buy the dips rather than sell the rips in the miners. I do have a few blue chips which might go up a bit on Monday because I think Trump administration just announced some exceptions to the tariffs, so we may see a bit of a pop in the markets. But the miners, they kind of go up with the market, and if the market's going down, well, gold's probably going up, and the miners go up with gold. So it really is tails I win, heads you lose, if you know what I mean. Right, let's go back to how I usually start off. That was a bit of a freestyle rant. The DXY, which by the way has become very relevant the last couple of days because gold's been going up as this has been going down. Look at that, we closed below 100. Remember, this was your sort of line in the sand. We came down so much. I really thought, okay, this bounce and then hit resistance there, not bad. And then to go down again and then again and again, that's pretty crazy. Obviously, the euro and all the currencies have gone up heavy against the dollar. Maybe we go up a little bit there on Monday because there's a bit of exception on the tariffs. But basically, the dollar, the damage is done. And yeah, we could go back up above 100 or whatever. But I think long term, the damage is done. Geopolitically, and it's just been exposed, and I think the dollar will go down. So we'll see. But a close below 100, I think, on a weekly basis also, that's obviously helped gold a lot. So let's keep an eye on the DXY. But again, the damage is done. Let's look at yields. Actually, more important than the dollar is probably the yields. So obviously, this is your line in the sand here, 5% on the 30. A close above that, and you are having problems. That's probably going to coincide with the DXY going down again. But that is another reason why this tariff blink took place. 10-year not as bad, but once you start approaching 4.8, that's when it's danger zone. I mean, this is what took down the markets before. Then it gets a little different. The 2-year, yeah, let's see. That might actually go back down again and visit the lows. The yield curve is acting strange. And obviously the one I pointed out before, the British 10 and 30 year, look at the 30-year, new highs. That's going to collapse that government. I mean, and all these plans that Europe have for spending all this money for a war they could never win is absolutely ridiculous. It's quite funny to watch, actually. So yield, dollar, let's look at the markets. All right. I'm just going to judge based on the S&P. We went all the way down. We hit nice support. We bounced. We filled the gap. That was that crazy day where it was overbought because, I mean, yeah, fine. They exempted all those other countries that didn't fight back, but China's the big one. And the China trade escalation is exacerbating, right? It's being compounded by this tick for tat. China said they wouldn't add any more. They've done their last round, but maybe the damage takes a while to be felt. So, and we've bounced quite a lot, right? And I know we've got another extra exemption, so we may actually go all the way back up here, test sort of 548-ish, and I reckon we'll fail, and then it's about coming back down again. And ultimately, I don't think we're going to go all there. This descending should act as resistance. So let's see. I do feel like we'll go up a little bit more on Monday, but we'll probably stop around here and then come back down again Tuesday, Wednesday. And then it's time to see how gold and the miners react because so far when the market goes down, gold goes up. And the miners have been following gold, which has been absolutely spectacular. And I love that because, again, the big vision for me, I mean, I love making all this money in the miners, but it's even better if the miners go up and the general stock market goes down. I do own general stocks, so I lose a little bit of money or a little bit of profit with the losses I incur from general stocks, but I really don't care because, 7 years from now, if that's when the trend changes, when gold's at 13,000 or whatever, and imagine Google's down 60% in terms of gold from here, I would be selling at Nico Eagle and buying Google. That's ultimately the trade I'm going to do. So I really don't mind general stocks going down. In fact, I prefer it. So that's what I think is going to happen in the S&P. A little higher maybe Monday, but then let's see where we close and then roll over and retest. I don't know about retest the lows, but at least go back down again. All right, gold. I usually visit gold now, but I've done gold. So gold, there is no ceiling. There's no next level. All right, you can choose your number. It just doesn't matter. I'm looking at prior resistance acting as support. So let's bring them up because obviously it's all moved. This is your support. It's 3,100 and I don't know 50. Go on, let's call it 50. And then you got this ascending, which is huge support as it's proven itself. Let's just do like this. And that's it. I mean, I can't see how it go all the way back down, but then you do have so many levels. That's your gold. Now let's look at silver. I haven't looked at silver yet. Silver's been stuck between gold and the markets. Now, obviously, the market's had a nice day. So silver's had a nice day. Silver's finally starting to catch up with gold. I feel like silver's now saying, okay, markets, that's cool, but It's like 65% starting to look at gold. Gold's just out of this world. Now, if it's going to follow the markets, it should go up also on Monday because this tariff relief should send us up to 33 on silver. Look at the high of day close too. That kind of helps. And the fact that gold's a runaway train, we should get to 33 on Monday. Next stop after that is 34, and that's when the people who were short silver. I'm not into all this short squeeze stuff in silver. Those days are over. Well, maybe that it's true, but that's when you start to get scared and think, oh shit, we know what's happened to gold. If we start to take out 34, 35 especially, then if there is a squeeze to be had, it'll happen. But 33 for Monday, and then those silver stocks should start to move. It's time for those silver stocks to start moving and catching up with the gold stocks because you see things like EXK, CDE 10 up 10, 11, 12%, but a Kaneko is up 8. So if a Kaneko is up 8, you should have CDE up 17. You know what I mean? It should be really double kind of. So the silver stocks really haven't, and you can just tell by looking at SilJ, right? I mean, where's GDX right now? It's up here. It's at 17.5. Well, in reality, well, you know what I mean? We took out our October high already, and by quite a bit. It was a gap and run. So obviously, silver stocks haven't been as strong. So yeah, that's now let me go back to silver now. Silver, let's see if we start to come back down. I don't know whether I'm gonna buy silver aggressively. Well, I don't buy silver, I buy the stocks, right? I buy gold stocks, silver stocks. I do own gold, but I buy the stocks. Because the thing with silver is you've got to judge whether it's following the markets or the gold. Yes, recently maybe gold a little bit, but if we're going back down, it's probably because the market's going down and maybe the markets can go down a bit more. So the silver stocks are probably the better buys long term for the amount of upside, but the gold stocks are more dependable. As I mean, we're going to look at them now soon. Agnico, Newmont, Barrick, Wheaton, just royalties and gold seniors have just been amazing. All right, let's look at the actual miners. GDX again. Okay, for resistance, you have to go back, back, back. I love that. Yeah, I said I'm going to give it some room. That's a good thing I said that because normally I would have had one or two levels already. Probably like 50 should be a level, right? And actually, yeah, 50 was a level for that day for Friday, but I don't see it, I don't see 50 here. It's just a big, nice number. So, and it's kind of the halfway point between prior resistance, 47 and 54, pretty much. But for me, resistance really is maybe you got something at 52, but yeah, kind of 54, even a bit higher, 54.5, kind of 55-ish, maybe just a bit before, just in case. I'll leave it there to be safe because you do want to trim that. Maybe that's a bit of a massive move. So if we keep running, I mean, that's not going to happen, is it? You're not going to have gold just do another $300 up, but that's your next resistance, and I'm in no hurry to trim anymore. By the time it gets there, my holding is going to be worth a lot, so I probably will be in a hurry to sell around there. But and a small trim, a little 5% here, 3% there, 10% on the stock that's been very weak, Mag Silver, or for example, Metalla, which by then their charts might start looking really good and they're going to do some catch up, but little 5% nibble here and there. And when you do 5% on all my stocks, like 20%, I hold like 20 miners, it's worth quite a lot in the end anyway. So it's a nice extra amount of sidelines cash for a drop. But yeah, as you can see, I'm in no hurry to sell, but to buy, yeah, I'll probably be buying there and then there. GDXJ, look at that. Beautiful right between the lines. Gapped up there, touched up here. Kind of 62-ish or 61.5 was resistance. The real big one is 66. I'm not selling. I think 66 might be a bit obvious. That's your post-COVID high, so that's quite an obvious one. So and that's quite a long way away. So I'll probably trim the juniors, if I can call them juniors, or the mid tiers that I hold once we start reaching just under 66. That's fair enough. And if we drop, then it'll be like before. I'll be buying, gap fill prior resistance. I have to make sure the market isn't going completely crazy, but yeah, normally I'll be buying around here. So 50, just under 59. And if we keep going, well, we're not going to get there, but you know what I mean? This ascending will be This level looks pretty good actually. Uh, yeah, I'll give it some room, whatever. So really here and there, but that's quite a way down. We'll see about that. Still J, this would be a resistance, but I'm not going to sell it because I think it's got a lot of catching up to do. I'm in I'm in no hurry to sell Silj. Again, I'm more now. I was selling pops kind of here-ish, which I feel ridiculous for doing. Obviously, it was small stuff, but now it's buying dips. So unless we go all the way up here, I'm not selling, and that's not going to happen for a while. I don't care how crazy silver goes. You'd need $35. You'd need $35 to get here, and some crazy short squeeze in silver to start getting there. That's a big move, right? Let's be honest. Actually, that can be done in 3 very good days, but it looks big for now. So my next sell on SellJ is 15. Got so many levels to take out. The dip buying, I would be still a bit cautious. That's a bit early, but that's my first consideration. Otherwise, the prior lows, because we might be going down with the general markets, and that can happen fast. And SIL, the seniors, that's good. So next level is, well, we kind of test it there, and then after that, it's this high. I won't be selling. If you have any continuation, which we definitely could, because the tariff exemption, so Monday we could have markets up. Still, SIL could go up here. You could have gold continue a little $10, $20, nothing special. So the silver and gold up on the markets. On Monday, you'll have SIL basically above 42, and I won't be selling. I won't be selling. I'll be buying the dips. So where would the dip be? It would be, well, it would be first gap fill. Don't know if I'd buy that. Maybe if there's one stock that's just down a bit too much. And then after that, this ascending doesn't count anymore, actually. Let me get rid of this, get rid of that. And this really belongs there. It's not a real level. It's kind of like a halfway point that you can see it's been valid for a while. So maybe your next point is here and then there. I don't know. Those are the levels I can see on the way up. We're kind of there already. So 1, 2 resistance. Then on the way down, this gap fill way too early to buy, but it's a level. There, a general level. 37 and there, the old level. Yeah, so the miners, it's a big difference between the silver, not big, but a difference between the silver and the gold miners. And then difference between, at least with silver, the senior and the juniors. But again, my thesis now has changed from selling pops to buying dips. I'm just observing the potential levels. And unless they make crazy moves, I won't be selling because I think something has changed and I've already trimmed quite a bit. So that's my take. Hopefully, you guys didn't sell too much too early like me, and you should be at all-time highs. My portfolio is just still under, and this is when you can tell I've not traded it perfect, or I would have been better off doing nothing, put it that way. But then I'm buying blue chips, so that kind of, yeah, it's harder to judge. But look, GDX is higher than it was before, so my account should be at new all-time highs, but it's not. It's just underneath. It's like here. But again, I think it's because I've been adding blue chips on the way down, but also selling the miners a little too early. So it all makes sense. I mean, at the end of the day, it's mathematics, so it has to make sense. Look at Newmont. That's so nice. I really thought this would take a long time. 2 days. So up here, it looks strong, closing a high of day, and then knowing what gold did and the institutions, what do they buy? They buy these types of stocks first, right? The Newmonts, the Barracks, the Agnicos, the Wheatons. That's why you can see them up quite heavy. So basically, it hit the levels that I indicated straight away. Like this level here that I've had for ages, this is just under 52 because of this. Absolutely perfect, on this Thursday. Next level was here, absolutely perfect. So I'm quite proud of that. But if only I didn't nibble enough out, but it wasn't that much on Newmont's. Newmont's still worth a very decent amount. Next level is the old high, obviously, right? This sort of 58 point whatever, just under 59. This level is irrelevant, doesn't count. It's too close to this one. Next level, I remember these from ages ago. You'd think 60 is a level, but nope, not really. This is a small level. I think you got to look at the bigger picture here. And I'm preaching to myself because that's the one thing I didn't take into account. Yeah, we could have another move up here, no doubt about it. And I think we're going to continue to outperform as Wall Street starts to scale into these miners. And then once you take out this sort of 59 level, well, really, this is your level. This is a small pit stop, this 61, 62. It's really this level here. You can see it. And then there, and then there. I mean, we've got to start taking out our old highs. It looks like it's far away, but once you start acting like an Nvidia stock, this can happen in a few months. So Newmont, those are your levels. Again, it's about buying the dips for me. So this, well, I can put it there, support. Next, that will be your support. And then, well, then you got to extend the ascending, something like this. I can't, can you imagine Newmont going all the way down? It's just not going to happen. This is just not going to happen. It's just not going to happen. You could go all the way down to 50 if there's a serious supreme crash that takes everything down. Because remember, there's always that potential that the markets really start to crash and then everything gets sold. And this will be the best dip buying sector in all the market. And this will be one of the best dip buying stocks because that's the seniors are the ones to buy on the way down. And then once everything's really crushed and stabilizing, then I hate saying juniors because I hate the juniors with a great passion. The mid tiers. For me, juniors are mid tiers. Okay, so those are your levels. Uh, I'm just watching the ones on the way up. I'm not planning on trimming any more Newmont. It's just buying the dips. So those are really dip circles. Here's obviously your next final level for Barrick, all the way at this sort of 21.3. I think that's no problem to get to that. This ascending is gone. Uh, your next level on the way down is going to be this gap fill, right? Or is this a level? You know what? This could be a level too. This sort of absolute high and then the low of the gap up. Don't underestimate that. So resistance, and by the way, where's the next resistance after that? Yes, correct. And it's far away enough to be a legitimate resistance. And then the old high, is that the COVID? Is that the post-COVID high? Yes, it is. March, is it? I forgot. March 2022 was whatever. That's the level. So those are your three main levels. The one immediately that we're about to hit, then the midway point. This little level here, support resistance, perfect. 23.5, decent big number. And 26, nice big number, and the old high. So boom, boom, boom. On the way down, you've got this, too easy, this gap, and then nothing obvious until the low down here, but that is a hell of a way down to go, and this is too much of a senior stock for it to go down there, so it wouldn't actually get there. I don't know where it would fall. I guess I would watch the GDX to determine where, does it get to 18, like this level? I'll leave it like this. I do need to clean these charts up a little bit because there is a bit too much graffiti everywhere, but you see what I mean. And I don't think we're going to go that low. So that's what I mean. Those are your levels on the way up and on the way down. And Kaneko, yeah, Kaneko is just insane. I don't know if it was one of I mean, it didn't do the best on Friday. 5% is okay, but it's just perfect, isn't it? Vertical. And the squeeze is just, it's hard to buy something that's with this pattern, but this thing is just printing money. It's just printing money. So, okay, levels on the way up, there are no levels. Okay, I'm not going to bother putting lines where I think, oh, 120, 125, 130. Nope. And anyway, I'm not interested in selling anymore. I'm just holding. I've forgotten its dividend. It's probably quite small, 1, 2, 3%. Three is quite good, but I don't care about the dividend. I'm just holding, holding, holding. And it's about the dip. So the first dip level would be here, 110. Jeez, I was just selling that like 2 days ago. After that, it would be quite hard to call and quite hard to imagine it going this low. I don't know, this used to be resistance that we broke out of, kind of retested, then we flushed a bit heavy because the market crashed. So maybe that interferes with what would have been a real level. I don't know why. I think 102 might be a level. I don't even think we'll get there. Otherwise, I'll do the low down there. And then this is a super strong level. I remember that was prior resistance that was never really tested. And it won't be anyway. So that's all you need to know about Agnico. That's for the dips. There are no resistance points. Next one is Pan American Silver. So this is respecting the SIL chart. I think this one I did trim on Friday. I'm not sure, which is maybe stupid because I shouldn't be trimming anymore. I think I have this habit, this addiction of selling on the way, little trims, but I do tend to buy on the way down stronger what I sell on the way up. At least I've got that going for me. Okay, so next level, obviously this is a level, but it's just touched it. Next level is the old high 2750. And then after that, by the way, the size of these circles don't mean anything. I just sometimes draw big ones and small ones. So after 2750, you've got 29 and then you got 30. 30 is a big one. 30 is probably when you got silver around 35. And then Pan America is the Agnico Eagle of silver stocks that could really squeeze to 38. Really, really, really. And you know what? I'm so sure that it will happen that I'm going to start putting my little circle, even though it might happen a few months from now. So it should be there. But anyway, so yeah, those are levels on the way up. Pretty much 27.5, 30, and 38. 29 is a pit stop. And we just hit this level here, which I've already marked. Now on the way down, um, it's silver. So if it's going down, it could go down a bit more than gold. I'm gonna say this is a level, and I'm gonna say this. Hmm, too many lines. Too many lines. I don't think this ascending works. I think this would be a level. I think you have to go back to the horizontals, and this is actually the same thing. Yeah, I think I would go with that. It's just, and I'm going to get rid of all these because even though they're correct, they just ruin the chart. So that's what I would do if we go down those levels. I'd buy this and this. I it probably won't even go down to here, but I just don't see anything obvious here, so I won't force it. Yeah, makes sense. Next one, Wheaton. Just another one of those seniors making new all-time historic highs. Not going to place any resistance levels, 86, 90, 100. Obviously, 90 and 100 will probably be a level, but I'm not interested in selling anymore. Wheaton is going to be with us for years. It's going to be the best royalty for this bull market, which is nowhere near finished. In fact, we might be at the beginning of the most interesting stage where it starts to see the big crowds come in, really. So I'm not going to do resistance levels, dip buying levels. Hmm. 78. You can see we've hit that a few times. I'm not going to say that this is a level or that's a gap, or I'm just going to sort of make a general level. And I wouldn't buy unless it's come down a decent amount. And I think 78 is the first decent amount. After that, I kind of agree with this line just because, you got the low of these candles. Also, it does a little flush there. There's just a few sort of daily candles that intervene here at the high and low point. Otherwise, it's all the way down here, which is too far away. Again, too far away. So these are by the dip levels. This is a pretty big one. I doubt we'll get to. Otherwise, I wonder if this is ascending. Nah, it's too far away. It's just not going to happen, is it? It's just not going to happen. I'll leave that like that. I don't even think we get to these levels, here or this. Forget it. Forget it. It's not going to happen. If only. Next, Franco Nevada. Amazing. This is big resistance. There you go. We made it. The 170 all-time high. So come Monday, we're probably above it. By the dip levels, we've got this gap. Is that something? God, it's hard to call. Because this is the most obvious area here. But here you can see a few, it's a bit like the other chart, Wheaton, I think it was. Uh, yeah, it's like the halfway point, You can see a few lows being put in, and I could be completely wrong, but if I was to remove this, you really think we're going to go from 160 to 140? So those are your buy the dip levels. They're my buy the dip levels. I don't think we're going to go much lower. We're not going to go down there. I'll leave these in just to look sophisticated, but otherwise we're at the all-time high, and that's the resistance, and it's already proven it on Friday. So another one to break the new all-time highs. Metalla, yes, that was hitting. This one I did trim. You know how much I hate Metalla now. This one was at a resistance point. I think I've made my point by showing that here. You can see it was trying to break out. I don't know if it really did. It's a bit tight. 320 used to be level. No, it's not anymore. It's more here because of the time element. This one, I'm not buying the dip. I'm not buying Metalla. I prefer to buy any of the other stocks I've covered so far than this one. So it's hit its resistance. Can it break out? If it's going to break out, Jesus Christ, it's now. It's going to do it. I mean, you've got every single wind behind you possible. Next level is up here just below 340. And then this seems surreal, but if it does start to break out further, which Jesus, come on, with what's going on, can you at least make this? He made the run a lot, under a lot fewer advantages back here. So let's see, maybe it does it. 340, and then we start to do a bit more of a squeeze, 370, 390, 410, blah, blah, blah. But buying the dip, okay, I left these levels in. I wouldn't buy this. That's nowhere near enough of a dip, but I don't even think I'd buy the stock. All right, let's go to silver now. Well, that's majestic. You see what I mean? That's probably also why my account is not at new all-time highs. The silver mid tiers, they should have done a lot better. They're still, not impressive enough, and that's because, well, silver's done okay, but it's because of the weight of the market dragging it down. But really, it should have already been way higher. So next level, yes, 670, completely agree, horizontal and descending. After that, the breakout 750. After that, we've got all these levels. I think that's quite obvious that this here would be a level. How long would it take? About there, and then blah, blah, blah. By the dip, I'm not anxious to, maybe silver stocks are the best buys. Just we need to start seeing silver dislocate itself from the market and then realizing, hey, I got to catch up with gold. Then silver stocks are by far the best buy. And I don't mean the juniors, right? I don't care about the juniors. Juniors should already be moving, but the mid tiers aren't. So I guess the juniors aren't. Those are your levels to buy the dip. I wouldn't buy this. This is just an old level. This one I would buy 520 definitely. So there's your resistance. There's your support. Next one, Fortuna, which has been a bit more of a gold stock, as I was educated on recently. But it's been very, very strong. Look at that, really strong. And even during the dip, there was 1 or 2 days where it sort of underperformed its peers, but it was kind of outperforming for quite a large period. So here we are, basically testing 650, kind of done it. Next stop is up here, not even 7. I don't even see 7 as a level. I think it's 720. And then after that, it's 8. Time to extend these lines. It's getting real. Time to draw a new one, like up here, just under 10. This can happen quickly. I haven't placed any sells for these 720s. I don't know, if I start seeing Fortuna up 13%, I'm going to have to start looking at the chart, and that's why I keep these levels in, and then I'll probably trim a little 5%, if it does a big move like that. Now, buying the dip, this I can remove. Well, I'll leave it in. That's that's not enough of a dip, of course. I would say this is a level. It used to be, and it still is. Resistance and support. This will be, and you know what that'll do, because it's not going to go that low. You would need the market to go below its low of, local low that it did a few days ago, which is not going to happen. If it does, it's going to be the ascending support. So those are your 3 support levels for Fortuna. Resistance, well, I don't need to draw these in, but you can see it's going to be there, there, and there. Obviously, next one is CDE. Yeah, that hit its resistance perfectly. So that was not only horizontal but descending. So that's strong resistance, and that proved itself on Friday. That's probably why I left it up there, to sort of be a middle point between the descending and the horizontal. Then after that, it's here, correct, 680. Then after that, it's going to be the old high, which is a kind of 10 cents, no, 20 cents between 740 and 7. Okay, I got a second circle for that. There you go. So boom, boom, boom. Those are your resistance levels. And then you start to really run to bigger levels. I think if we take out 780, we're not going to go to 8. We're going to run. There's probably something bigger going on, and you're probably going to hit this descending level. Okay, we're far from that. I don't need to care about the precision. Now, on the way down, yes, technically this is a level, but we probably take that out on the first day. And then it gets a bit tricky. And you'd have to find out why we're going down. Obviously, this is a level, but we've got something in between these two, and I don't know where it is, so I won't force it. I'll be looking at the silver chart, the GDX chart, the S&P, the bonds, the DXY, and then I'll figure out, it's at 511, something like that. Heckler. Okay, see, at least it's going up. At least it's going up. Whilst the market's going down, that's always nice. So next level is up here. Then you got a mini one here. Then you got one there. Then you got one there and then there. Yes, it's all pretty much horizontals. I think the descendings have been taken out. Now on the way down, buying the drop. Okay, that's a level, but again, that's taken out on the first day. Um, hmm, I'm not sure. I feel like this is more of a level, kind of negated from this, but again, that's market crash moment, so maybe we can let it off. And then, of course, the market crash low. I'm not sure if this is correct. And this is a bit unnecessary. I'll leave it in anyway. Bit unnecessary. No, it's okay. Those are levels. EXK. Okay, it's proven itself there. Gap fill, $4, big round number. Then after that, it needs to climb all the way. Hmm. I'm not sure where the level is here. Now I'm looking for big numbers. 450. No. I feel like there you got these two high of days. Quite a few candles are coinciding with this 460. It's a bit desperate, but I'm going to say 460. It's probably best to look at the silver chart and the GDX chart. Then all the way up here. If silver's squeezing, then even 460 is irrelevant. But those are your resistance levels. Now, on the way down, I feel like this. See, up until here, it's fine, right? Look at the low, low, low. And then you got the market crash. So I feel like extending this. I don't usually do it, but I've been doing that for a few charts today. So on the way down, maybe here 340, but obviously definitely here the low of the bear market flushing. There you go. Those are levels on the way up and on the way down. They're not easy. And obviously I could be wrong, but let's just clear this up. My God. Okay, Mag Silver, which was actually very weak during this bad earnings, made a new low whilst everyone else was nowhere near making new lows. But the next day, pretty good, then okay. I actually thought it wouldn't get this high already. And I think I trimmed this very few that I trimmed on Friday because I already realized that the name of the game should not be trimming but buying dips. But Mag Silver, because of its weakness here and bad earnings, I thought if you're going to sell any, it's Mag, it's Metalla, and I think there was another one. I think Pan America, just because of how obvious the resistance line was. Anyway, here you go. They're your resistance levels, just to watch, not necessarily to trade. Talking to myself here. On the way down, this will be a level, but I wouldn't buy it because it's just had bad earnings. If everything is going down, why would you buy Mag Silver? Down here, you might consider it though, and then blah blah blah. Right, that's the silver stocks done. Now, Aris Mining, which has become one of the best ones, the sort of mid tiers. I mean, it's done really quite well. And now we're starting to enter I don't want to call it the gap zone, but it's a bit of a vacuum where there's no obvious level until all the way around 6 or higher. So it's just taken out its 5 sort of 15 level, which I didn't trim because I'd already trimmed like 2 days before around, I think it was low fives or something. But yeah, for me, it's just these levels up here. So there's no selling going on. And by the way, if we start to take out those levels, it's one of those weird ones where a lot of dilution happened, but it came back from the brink of bankruptcy. So the chart suggests it can go crazy. maybe even 10, right? Look at this price support. I'm not one to look at past charts and say it's going to go there, but this one, this one's done very, very well, and you've got really the best macro backdrop wind in its sails. So those are your resistance levels. And they could get there quickly now. Support, uh, yeah, support's going to be hard like all the others. That's your absolute low. Is that really a level? Hard to call, hard to call. Here, maybe. And here, that was your resistance. Well, I'll leave it in here, but I wouldn't be buying that. Even this, I wouldn't buy. I'd be buying a bit of a drop down here, but I can't tell where the support is. 440, maybe. I'll leave it in anyway. Iron gold, another one that actually made new highs, new 52-week highs on Thursday, and then on Friday just hit the next resistance. I don't even know if I had a sell in place there. Jesus, when you have to zoom out like that. Next level is 880. This is beautiful, actually. This is really nice. Whilst everyone else is taking huge hits to their portfolios, we're like zooming out of charts to see the next resistance level from years ago. Obviously, this is a level. Now support. Okay, so resistance 880 is the next one. This has just been hit. I'll leave it there. This is a level, it's prior resistance. Right, I'll just sort of do middle, one for both. So 660 is your first, and that could be a decent level to buy. Small nibble. Then I've got here, I agree with that, just above $6. Sort of, I don't want to call this a gap, but you know, that's one level. Let's make it bigger, make it more obvious. And then down there, which it won't get to unless there's a serious market crash. So IM Gold was actually quite weak on this move here. Like it was weaker than others, if I remember. But what it's done in the last 3 days is pretty phenomenal stuff. B2 Gold, finally 330s. Remember how weak it was? And even before this crazy Trump tariff moment, it was okay. And then it lost momentum. Bam, what it's done there is great. This one, I believe, I had a good deal canceling. And now I'm looking for the 350 and squeeze. And what I mean by squeeze is not go all the way to 370. So I'll remove that. I'm talking about this level at least. This goodbye. This hello. No, wait. Yeah. 430. 430. There you go. These are your next levels to watch on the way up. It's time to see some bigger numbers on BTG. And I don't care about the geopolitics. Let's be honest, we'll probably have peace in the next few months, and that can only help B2 Gold, right? There'll be less tensions in Africa with Russia and all that. So nice gap. Now, do I want to buy the dip in B2G? Maybe. It's not my favorite candidate, right? I don't need jurisdictional, geographic problems, but who knows? First level would be here. Next level would be. Hmm, no, it wouldn't be obvious enough. It's like many of them. You got the low of the this bear market, and then you got this huge range, and it's somewhere in between. I just don't want to force it. We'll let the charts do it for us. Next one, Equinox. On the way up. Next one will be all the way up here. And then here, these are your resistance levels. After that, huge move up to $9. That would be amazing. Now on the way down, your first level is this gap zone, which is too easy. Then, honestly, I feel like it might be here just because the low there, and because it's a bit of a perfect midpoint between this first level here and the low of the tariff market. And then if we extend this ascending, we have just underneath this one. And as time goes by, it will coincide with this horizontal, so that'd be good. But will we even get there? Probably not. So those are your levels. It's always hard, this middle level. I feel like I'm forcing it. SBSW, really phenomenal move because this one was stuck between acting as like a general commodity stock, like copper, well, all the metals. It's like a multi-metal miner, and silver and copper have kind of been weighed down by the markets. Gold has not. So I thought it wouldn't have done as well in the recovery, but it has. But my God, the candles are all over the place on this one. Lots of gaps. It's a minefield out there. Okay, look, let's start with resistance. That's always a bit easier. Next level is all the way up here and then there. So next level is going to be 470 and then it's going to be 5, let's say 20. It's probably 530, but and then 590. And after that, just forget it. If you're starting to take out 590, you're going for a huge move to crazy seven bucks, which can happen. Especially SPSW, it moves like 16% a day on a decent day. Now on the way down, so the last candle is here. You're gonna have gap fill here, and I wouldn't be buying SPSW. I'd be getting gold stocks. But anyway, if things are dropping, $4. And if we're starting to go down, honestly, this one, let it come down. I wouldn't look for some middle ground. This one is wild, both directions. 320. That's a long way down. So $4 and then 320. It probably stop off at 340. I'll just leave a little yellow line there, but okay. So there you go. Those are the levels on the way up and on the way down. I marked the levels on the way up because it's interesting, and in some rare occasions, I may trim if we really move a lot because it's a habit and it's generally the wise thing to do. Take something off the table. But my focus on a sort of philosophical, not philosophical, just strategy change. I'm no longer really selling pops as much. I'm buying dips, and I prefer gold stocks, royalty stocks, the best of the best. And if things continue to go down, then I'll add to those again, of course. I'm always doing little 5, 10% ads, and I'm usually doing like 2, 3, 5% sells on the way up. But if we keep going down, add again, and also maybe start adding to the silver stocks, the mid-tier silver stocks, once we've really come down a lot, and I feel like it's time to climb. Because when we move up, gold and silver stocks, the silver stocks do more, do better, and long term they have a lot more catching up to do. But you've really got to be sure that you've got the low in, otherwise you're going to take a big hit because they go down a lot more. So for me, it's a little different this time. The gold stocks are starting to get noticed by the big investors. I feel they are starting to really move. They are the standout sector in the whole market. Bonds are not going up, they're flushing. The DXY is not going up with this bear market in crashes, it's going down. Shit is different. So I'm trimmed. I'm happy with my account. I should be at new highs next week if we continue. But I'm looking to buy some dips. Not sure about you guys. So anyway, hope that's useful to you. Good luck.